What up, guys? Kevin Cage here with another crypto update. We're going to dive into some recent news and we'll keep this video short and sweet. So, first up, coming out today, VanEck files for a spot Solana ETF. So we can see right here we have the VanEck Solana Trust Form S1 and apparently Matthew over at VanEck as head of digital asset research. But we can see this news today was also shared by Reuters, and we do know that there are a lot of institutional players that have big interests in Solana. We can see them saying right here, why do we believe Solana is a commodity like Bitcoin and Ether? Emphasizing the native token SOL functions similarly to other digital commodities such as Bitcoin and ETH, utilized to pay for transaction fees and computational services on the network. So we're going to find out in the future if the US actually comes up with a new framework, new classification instead of security, commodity, currency, etc. I like what other jurisdictions have discussed classifying assets as security tokens, utility tokens, payment tokens, etc. We know VanEck previously has given a big range for Solana, so we can see a conservative range of $9.81 to as high as $3,211 by 2030. I do think it's interesting that they have 3,200 because that is a Fibonacci extension at the 13 extension part of the Fibonacci sequence. And thus far, we know Solana from its cycle low, even the wick has been a top performer. It did reject the 786 with a wick in about 4 candle bodies. Pulling back with the rest of the market, we are below the 21-week EMA, and we can see the 50-week moving average is right around $90 plus. I also got a great question in yesterday's video, basically asking me to explain what's the point for XRP to go to court and prove that it was not a security, and now everybody is rooting for an XRP ETF. Wouldn't that make it a security? So just to quickly run through that for anybody curious, so the creation of a spot ETF, an exchange-traded fund, does not inherently make the underlying asset a security. So these spot ETFs are regulated as a security by the SEC, but the classification of the underlying asset itself can be different. One popular example would be gold, which is actually a commodity even though the gold spot ETFs, which are funds, are regulated as a security. So the shares of the funds are a security, but the underlying asset itself is a commodity. And so we know the CFTC considers Bitcoin to be a commodity even though the Bitcoin spot ETFs themselves are a security. And there are plenty of ETPs or exchange traded products for a variety of assets. So this is on 21shares.com. We can see $50 million of XRP. And the reason everybody, and myself included, is rooting for spot ETFs for different assets is this would basically help to bridge the billions, if not trillions of dollars in traditional finance and onboard even more conservative users. I'm no legal expert, but that's at least how I see it. And also looking at the spot Bitcoin ETF assets under management. So the total value is right around $52 billion. And yesterday I was looking at figures, so we know that Bitcoin's market cap is over $1 trillion, around $1.2 trillion. I'm not really sure of the accurate or up-to-date market cap for gold today. I've seen big ranges of 12 trillion to 18 trillion, and most recently around $15 trillion. Significantly larger than Bitcoin's entire market cap. This eclipses the entire crypto asset class by multiple X's. And I was looking for figures for gold spot ETF AUM between all of the different ETFs, and I saw figures of $200 billion, which is a really small fraction of 15 trillion. And most likely the reason for the AUM of gold spot ETFs to be significantly smaller or a fraction of gold's total value or market capitalization is because it's a physical asset. With the majority of gold held by central banks in private investment used for jewelry, even some industrial uses. We've gone over some past predictions for Bitcoin spot ETF volume in the future. I think it can be a lot bigger than what gold is long term because Bitcoin is a digital asset. People are already familiar with storing it. I don't really see the value of an ETF specifically, but traditional investors might. If I'm holding crypto, I would much rather just self-custody it. I can trade it 24/7, 365 and do everything I want with it instead of having limited trading hours. But some traditional investors might not mind holding shares of the asset instead of owning the actual asset because the ETFs are still backed by actual Bitcoin. So we'll keep tabs on other alt ETFs. We can see the Ethereum ETFs awaiting for spot trading in the United States to go live, hopefully this summer. And the question then becomes which other assets will get alt ETFs next in the top 10, top 20, and maybe lower down the road. And we know that Robert Mitchnick over at BlackRock did say, in quotes, there are about 3 investable assets. And we know the Bitcoin spot ETFs were approved in January. The price chart actually crashed a little bit and then later went to an all-time high. All right, next up, super quick for Toncoin, TON. We mentioned this yesterday and we had some big news from Dan Moorhead, who is the founder of Pantera Capital. So we have TON. I've heard this pronounced ton instead of ton. So this is a layer 1 network originally designed by Telegram and continued by the open source community. And we know that Telegram is one of the largest mobile applications in the world. They have over 900 million monthly active users. So just wanted to share that Pantera is highlighting TON, their largest investment ever that took place this year. Next up, we've shared by Good Morning Crypto, just emphasizing the Dubai International Financial Center, the DIFC, with XRP, we can see over at Ripple Swell. We've gone over this a bunch that licensed firms can now incorporate XRP, the digital asset, into their virtual services, so this is right within Dubai. So sharing that Ripple was approved by the DIFC, this financial center in Dubai, but does not currently hold a VARA license. And VARA is the Virtual Assets Regulatory Authority in Dubai, so this would be a really good license to get. And going to the DIFC website, under the Who We Are page, we can see how much money and how many countries are in this center. I thought this was funny, shared by Altcoin Daily, CNBC having a funeral for Bitcoin back in the day when it was at 6,000.
Fun while it lasted, so many memories, so many friends. There was Tom Lee and his calls for 20,000 by year end. There was Novogratz and his calls for 40,000. And there was Ripple. I think we'll miss you most of all, Brad Garlinghouse. And then there were the characters. Bitcoin Jesus, the Oracle of Bitcoin, all 500 of the Ethereum co-founders, and who could forget the Coinbase screen grab and mindless trolling on Twitter, and of course our Bitcoin bug. Bitcoin, we hardly knew you.
Next up, we have shared by Hedera, so Ty's network of 150 leading institutions now has extensive coverage of Hedera. So they're launching HBAR Insights, a free public dashboard showcasing key HBAR metrics and on-chain data. So all types of information. We can also see ecosystem development. So we can check out the Thai terminal along with HBAR.market for HBAR Insights. Next up, I saw BankXRP sharing Japan is expected to lift regulations that prevent limited partners or institutional investors from investing into crypto and digital assets. So we have the company Nomura on Hedera's governing council recently surveyed 547 investment managers. The survey found that 54% of Japanese limited partners plan to invest in digital assets within the next 3 years. So let's see if Japan lifts regulations or just makes clear guidelines and other jurisdictions follow behind. We can see Nomura in Hedera's governing council, and we still have several spots left. We got some big news from the ALGO Foundation breaking from Decipher 2024. The first tokenized money market fund has arrived on Algorand. Archax, the same group involved with Ethereum, Hedera, XRP, makes Aberdeen Money Market Fund accessible and transferable on Algorand, using Quantos, this euro-dollar electronic money token. So we can see Quantos with financial gateways. So thanks to Archax making Aberdeen's money market funds accessible and transferable on Algorand using atomic swaps in digital euros. So now when I'm on Archax, going to businesses and clicking invest to look at their funds, still keeping tabs on Aberdeen's liquidity funds down below, we have BlackRock's Treasury Fund, and then we also have some other liquidity funds. And just looking at Archax's website, keeping in mind a variety of other networks in the future and any other ones they add. Next up, for Casper Labs, so in a previous video we discussed Prove AI set to launch in Q3. We also discussed the EU AI Act, its timeline, and we can also see other AI legislation. I saw Tokenizer with this. Seems like Casper is now referencing the OECD for AI frameworks. They wouldn't be doing this unless they were sure Prove AI directly aligned. The OECD is the Organization for Economic Cooperation and Development, a leading intergovernmental global standard body. Going through a bunch of connections like the Casper CEO at the Raise AI Summit, along with Sham over at IBM Consulting. He was on that webinar and the recording was put out a few days ago. I think the recording was actually made maybe 2 weeks ago. And Tokenizer also highlighting this gentleman on stage alongside the Casper Lab CEO and Sham of IBM. So we have Theo right here, well-respected name within the AI space, advisor for BCG, a huge group, WEF AI academic partner, and OECD network of AI expert. And just like Tokenizer says, it's more than likely that they're now working together to align AI governance frameworks because Prove AI, along with Watson X, are fully regulated and compliant. And just like I said back in January during the IPW news for Casper, we're in accumulation. If we don't see mainnet deployments, we can easily see an all-time low price. Until we break that 7-cent fair value gap, it's all noise, and we're still in accumulation. And I know back in May we were just talking about it either creating an all-time low for a spring, and unfortunately we're there. So hopefully when Prove AI launches, set in Q3, that we can bring some necessary deployments to Casper's mainnet. Because we can see as Bitcoin pulled back and Bitcoin dominance stayed the same or climbed, a variety of assets went lower. So we can see Curve at an all-time low. We have Engine at a cycle low, not necessarily an all-time low. We have IOST also similar to Engine. We have Kava at an all-time low. We have Kilt at an all-time low. We have a left zero, a different type of structure per its launch, but we can see back to lows. So looking at Casper, the question then becomes, if this is a spring in accumulation and not distribution, how deep is the spring? So from here, it's really based on Bitcoin's price action, the relationship with Bitcoin dominance, and the altcoin market. So looking at the weekly RSI or momentum, we can see we're right around 30. If we can hold this level and consolidate, there's a chance, but if we pierce this level, we're definitely going lower. So we can see examples of ALGO on the weekly price chart in the past playing around the lows. We can see bouncing just below that 30 zone before finding support. And also just looking at Bitcoin's weekly RSI, when we did go into oversold below 30, it was relatively close to the bottoms. So anything can happen here. What we don't want to see is the weekly RSI pierce below 30 and just run sideways or drop lower. Or something like Flow with the RSI going below 30 or close to it 1, 2, 3, 4 and still creating lower lows. For any asset in oversold or close to oversold, I want to see when that RSI on the weekly time frame raises up with price action. So for assets, if they are in fact in accumulation and this is the spring structure, we can look at the current trend, the weekly RSI, and also draw some fib extensions. And just big picture, needing to see Bitcoin hold above the 8-month EMA along with ETH trading going live this summer. And the main thing I'm waiting for is the historical alt season that we saw in 2017 and Q1 of 2021, where Bitcoin dominance found its top and crashes. Okay, last but not least, so I know we've gone over the total liquidity index and basically the everything code shared by Roth, highlighting Bitcoin with liquidity growing and showing Bitcoin at multiple six figures. And in past videos, we also highlighted his crypto seasons of summer, fall, winter, and also the banana zone where we're at today. I think it's interesting, and I'm personally considering it. And anything shared by anybody, including myself, take it with a grain of salt, believe it when I see it mindset's the best. So basically, Kiyosaki saying, I believe Raul knows what he's talking about. The banana zone is when Bitcoin lifts off, goes parabolic, creates a sine curve when people say I should have bought some. And if you've listened to Raul, I think it's a really convincing argument. I believe that this market and the everything code that he shares is really based on global liquidity rising. Now, timing this with any potential catalyst is a whole nother challenge, but I'm very open to this. I think Raul has proven himself as an investor for decades. He has experience in a bunch of markets. He is a global macro investor. He bought Bitcoin over 10 years ago in 2012. So he's witnessed these cycles and he understands retail sentiment within this. So he's witnessed 1, 2, 3 full cycles. And I know some predictions years ago were off or too high, so always take it with a grain of salt. I can't name one person in the crypto space, especially big names that have been here for multiple cycles and haven't been wrong. And when that happens, usually people will say, oh, he doesn't know what he's talking about, and we could argue that nobody does. It's a market, it's ever-changing. And good luck with timing anything consistently over the years. You might be locked into a trend for a week or a year, but that trend is always going to change. But what I entertain most is the macro structure, and I think that's the most helpful. So not financial advice, guys. This is my opinion. I own crypto. I'm tired of crypto crashing. I've experienced 2 cycles, and I'm waiting for a third. And right or wrong, I believe that Raul knows what he's talking about. He understands macroeconomics, network effects, this market. And his total liquidity index and his view of cycles are definitely something that I'm considering. So anyways, end of rant. I hope you guys enjoyed today's video. I've been playing with my audio to try to reduce the hissing noise when it's like a sharp S sound, so hopefully it's better. I feel like it's still cutting some audio clips out, so I'm still working on it, but appreciate your patience. I hope you guys enjoyed today's video. Thank you so much for watching, and I'll catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.